failure at the resistance zone was identified in yesterday's video, and after I identified the market weakness, and this is how I actually trade the breakout to the downside and profit from there. So do remember to watch the trade review section in the middle part of the video. Hi, my name is Ming Jong, and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 27th of October. So in this video, I will be sharing the market recap from yesterday's session and also a trade review in the 3 minutes time frame, which I will include the entry, the exits, and also the rationale behind. And definitely going forward, I will be sharing my trading plan for the session later, together with the levels that I'm watching in the current market outlook. Alright, so let's just get started. So let me just get down to the daily time frame and let's take an overview of the market. So yesterday was bearish. So right after this market failure, as I pointed out in my video yesterday, and we see the continuation of the weakness to the downside and with the increasing of the supply. So when the market actually fell at about 3400 level, it comes with the increasing of the supply level, and actually it tested quite a few levels as well. So let me show you the hourly time frame to get a lot more detail out. So first of all, something that stands out to me is the increasing of the supply level right at this 10 p.m. bar, 11 as well, and also 12 and 1 as well. So this 4 hours bar just comes with increasing supply level and together with the bearish results. Apart from the last bar here where there is demand come in and eventually actually reflected in the next few candles. So just prior to that, in my video yesterday, I talked about the failure right at this resistance zone, 34.50 to 60, and where the market actually failed to overcome, and subsequently the market weakness can be expected. So you can see that right after it actually break below the immediate support level at 34.30, it just doesn't have any lift to rally up. So subsequently, that is the range form, and eventually have a kind of the forced breakout here, and followed by a strong breakout, and then continuation to the downside. So let me just show you in the 3 minutes time frame how I actually identified the market weakness and how to actually trade the breakout to the downside. And I actually scale in quite a few positions. So first of all, let me give you a bit of the context. So as usual, context is very important in trading. So that's the US session and that's the Globex session. So in the morning, the Tokyo session, we have seen a gap down right here and subsequently have a reaction down. So this is the first clue of the weakness, because that is right at the resistance zones at 34.50 to 34.60, and it actually just fell right here, and it just never filled the gap right after this gap down, because you can see that the rally is kind of weak, doesn't really touch the gap resistance, and eventually it just drifted and fell right here, breaking down, and subsequently just have this trading range form. So my plan or my trading plan was actually just based on this trading range alone, and also right after the failure of the resistance zone at the 34.60 and 50. So that already gave me the bearish bias, but subsequently I must admit that my first entry is right here, which wasn't a good entry to me. Why is that? Although it actually gave me the most profits out from this entry alone, but to me this is absolutely a early entry, because I was really in a bearish mindset. I just think that the market is going to go down based on the rejection from the resistance zone and also inability to rally up. subsequently forming this kind of the trading range. So my trade was relatively simple. So for this early entry is based on the false breakout or upthrust of the previous swing high out from this trading range alone. So you can see that there is a breakout bar right at the opening here. So this is a 3 minutes time frame. So in the first opening bar, there's a breakout, and subsequently we see that there is no follow through to the upside. And in the fourth bar, there is a break back into the trading range, and the supply level is kind of increased a little bit, although it's not ideal. I just think that it could just go down from here to at least test the low. So this is a bit early because the supply level is not really spiked to a level that I wish, but nevertheless we can see that subsequently there actually has no follow through to the downside. In fact, there is a hammer followed by a few bars and eventually have another attempt to push up. So you can see that it almost got me to stop out right there. I think there's only maybe 0.7 or 0.5 to my stop loss. So fortunately, the trade is still in, hasn't triggered my stop loss. So I think this would be a much better entry where there is an upthrust, false breakout, and then followed by the failure with the increasing of the supply level. So this is a lot more clearer to me. So this portion here, we have definitely seen increasing of the supply. So definitely I think right after the close of this bar, that would be qualified, that could qualify as a good entry. You can see that the entry is pretty much the same as this bearish bar here right after the close, but this is a lot clearer, and also this is considered as the good entry by considering the increasing of the supply level. So this is where the movement started, the downswing. So anyway, right after that we have seen this type of the sign of weakness. So this is the clue of identifying the market weakness, because the breakdown of via this downswing actually has an increasing of the supply level and also breaking down of the support. So subsequently we see that there's just inability to rally up despite having some demand behind. So you can see all this small bar and also some rejection tail, and it's just barely touching this support turn resistance level. So it's pretty much a textbook style. So subsequently I just scale in with another trade right after this reversal bar here. So because I see that there is a sign of weakness followed by inability to rally up, that suggested that supply is definitely present. So this is my first confirmation. I just enter another short, and subsequently after this final confirmation, which is the breaking down and confirm, so right after the close of this bar, I just enter another short. So total there's 3 entries to me. I just enter short. First one is a very early entry based on the false breakout right here. Second is based on the reversal, and third is just after right at the confirmation bar. So you can see that I purposely avoid the first breakout because the first breakout usually just drew out a lot of the supply or demand in this case, because we just entered a short to the downside. So you can see that this breakout bar comes with a spike of this volume. So this is a spike of the volume. The spike of the volume equal to increase of both supply plus demand. So in this case, supply obviously is dominating because you can see the weather results, low close, big bearish bar, and also commitment to the downside. But subsequently, here comes the reaction, so the weak rally up. So we don't really know how far will the rally go. So I always would like to see the reaction right after an impulsive move. So right after this, we see that there is an inability to rally up. That actually confirmed the bias where there is a lot of the supply presence. So I just enter short at the reversal and also after the confirmation bar. And subsequently, I just managed my trade using a trail stop, and then it just kind of stopped me out right at this bullish bar. So I think this is not a bad exit because it kind of just stalled for maybe 1 hour in my case. Let me just take a quick look. So that's somewhere around 11:30 and that's 12:30. Yeah, so it's just kind of stalled for about 1 hour. So not a bad timing to exit right away for all three of my positions. So definitely satisfied, and you can see we have this reward to risk ratio for this early trade got around 3.2 reward to risk ratio, so that's very good. And subsequently the entry wasn't too bad, so definitely is about 1 point something. Alright, so this is how I actually identified the market weakness based on the failure of the resistance zone and based on the sign of weakness alone and based on the supply and demand signature as well. Alright, so this is the trade review, and let me just drag down a little bit. So you can see that subsequently there's a continuation of the sell-off right after just broke out from this small trading range. There's continuation to the downside. So if I just get to the hourly time frame, you can see how far the correction or the sell down from yesterday's session travel. So if you still recall in my video yesterday, I do talk about there's the immediate support level 3380, and definitely this is a 3400 level. So if you just zoom in, let me zoom in a bit, clear this. So 3380, there's just a minor bounce up, so I've seen it in this demand tail right here. So there's some demand come in, but the supply is way overwhelmed the demand, so we see the continuation to the downside until this hammer form, and that actually reacted or rebound from the level that actually makes sense to me as well. So if we just take a look at this level, so that's the 3400, that's 3380, and that is pretty much 3360. So this trading range is still providing some kind of the support, but right now if we just couldn't overcome 3410, I think there's a greater chance definitely we're going to see the test of the 3360, the low, the swing low here. So I think for the session later, definitely from 3410 to 3400, which is pretty much this breakdown bar. So going up right now as a test of this support turn resistance zone and also the breakout bar as well. So definitely I think 3400 to 3410 could be a good level to watch for short entry. If we can just climb up, then I think we can have a relief at the moment. Else further weakness can be expected if we see some kind of the rejection from the level 3400 to 3410, and should definitely test the swing low at around 3360. So let's just see how far it can travel. So we still have some levels if we just base on this trading range alone, but definitely it's still in the correction mode at the moment. So my trading plan later is definitely still watching out for 3400 to 3410 to look for rejection. Otherwise, definitely check out this very obvious level from 3360 to 70 to see whether we can have some rebound from here. This is the end of the video. Hope you enjoyed it and get something useful out from the video. If you'd love to learn more on how to increase your winning rate when you're doing the trading, definitely check out the video that's shown on the screen right now, and do remember to subscribe to my channel so that you get instant notification of my future video ideas. As usual, if you have any kind of the comments, suggestions or trade ideas you'd like to share with me, feel free to comment below. Thanks for watching. I will talk to you soon.